All right, welcome back. You're still watching tomorrow's trades right now, right here on ET Now. Let's just go across to our research desk. Darshan joins us with a quick snapshot of three numbers. I hope you don't run out of breath, Darshan, but Unitech, HDL and Reliance Infra.
Well, all three numbers expected to come in with weak earnings. Let's start with Reliance Infra, and it's important to know that it's important to see the standalone number because the consolidated will also have the numbers of Reliance Power that will come in. What we are expecting is a growth to the tune of almost 11%, and that will come in mainly on the back of the EPC division that the company has. Power revenues are expected to be sluggish for the company. Apart from that, we are seeing profits will be down almost 23%. One of the main reasons is the high interest cost that the company is paying, so that will dent the margins of the company also. And also what we are seeing is that a couple of these road projects have gotten operational, so they will aid in the revenues, but overall the company is expected to come in with weak numbers. Coming to Unitech, we are expecting that growth to the tune of 4%, but profits will be down 22% to almost 77 crores. Margins are pretty much at the same level. For Unitech, company has always over the past few quarters has put its focus on execution rather than new launches. So no new launches have been coming from Unitech, but 1.7 to 1.8 million square feet is expected to be booked in this quarter itself. And management itself is expecting traction to improve from the second half of the year. So first two quarters they expect it to be weak, but mainly interest cost is another factor which will dent the profits of Unitech. HDIL, what we are expecting is we are seeing sales down 4%, we are seeing profits down almost 22% to almost 148 crores. And the main reason here is that they follow the revenue completion method, and most of the projects are not eligible for actually going ahead, and they haven't actually crossed the thresholds that they can be recognized. So mainly it will depend on the TDR and FSI sales for HDIL. Apart from that, most of the projects will start contributing from the second half itself, and interest cost will hit the bottom line. But for HDIL, more clarity is needed on the airport project and what kind of pricing are they seeing for TDRs.
All right, thanks for that, Darshan. Poonam, come to you. IDFC is another set of numbers market will be watching out for.
Very true, Tanveer. We expect a 377 crore profit for IDFC, which is up nearly 20% on a YOY basis. This is on the back of a very healthy and a strong net interest income growth of close to 24% on a YOY basis. The spreads for IDFC are expected to remain stable. FY12 spreads saw at approximately 2.4%, and expect modest gains from the principal investments, and investment banking and AMC revenues are going to remain stable on a quarter-on-quarter basis, and the institutional broking revenues are expected to be subdued because of the weak capital markets environment that we are seeing as of now. Expect a strong growth in terms of the top line. A loan growth of 30 to 32% is expected on a YOY basis, and asset quality is also expected to remain stable. The gross NPAs stand approximately sub 0.5%, somewhere in the range of 0.3%. So overall, good set of numbers. Nothing exceptional, not too much of exceptional stuff in the numbers. Key to watch would be the management's guidance on the business growth as well as margin spreads and any uptick in the asset quality. Back to you.
All right, thanks for that, Poonam. We'll head into a short break right now. When we come back, get you a quick snapshot of BNSN, the stock game, and also the key stories we followed on the channel today. All right, get you a quick update on BNSN, the stock game, and how things stack up on the first day of the new contest. Naresh Mirani is in the #1 spot. Saumil Mehta is up next, followed by Ashish Kapoor. All right, here out. In fact, that's the overall turnover for you. 1,30,000 crores done in total, with about 9,000 coming in from NSE cash and about 83,000 crores done in NSE futures and options. As we pointed out, a few prominent voices we heard on the channel today. Pradeep Chaudhary, CMD of SBI, expects an aggressive increase in FY13 loan book and does not see any headroom for further rate cuts right now.
Maximum burden or the load of the slowdown that has happened has come on the mid-corporate and the SME sector. This quarter, I think second and third quarter NPA accretion should be much slower, and a maximum 3,000 crore net slippage is what we are targeting for. On the net restructured book, the maximum loss that we anticipate could be anything between 3 to 5%. So on a 36,000 crores, if we have to take a hit, the hit could be anything between 1,000 to 1,800 crores. This quarter and the next, we expect an aggressive increase in the loan book, consequent improvement in the net interest margin. So our telecom exposure is to the top rated companies like Airtel, Vodafone, Idea and others, Tata Tele, which are very well rated. Out of 3 lakh crore they would also put in capital. So about 1 lakh crore would come by way of capital, and 2 lakh crores is not a difficult sum to fund now that the spectrum can be taken as a collateral.
All right, with that we come to the end of this edition of Tomorrow's Trades and Closing Trades. Thanks very much for watching the show. Coming up next, more news and updates.